A little bit about my background. Yes, I'm one of the co-founders of Factum, a local blockchain company that builds enterprise software for governments and financial institutions. I'm an angel investor. I invest in blockchain technology, IoT, and artificial intelligence. I have a book called Blockchain for Dummies. I was one of the people that helped commercialize blockchain technology and start to bring it to the forefront instead of it just being about Bitcoin. So the first part of this will be about kind of like, where did this technology come from? You know, I think for people that are just starting to see it, it might have just been like it just came out of the blue, but it's been around for quite a while. So we'll kind of go into the history of it. We'll go into how it works, and then I'll give you guys an overview of kind of like the state of the industry right now. So where did it come from? 2007, 2008, we had the Great Recession, and that really planted in a lot of people's minds that maybe our financial institutions weren't working the way that we thought they would work. And I'm an economic and sociology nerd. I love that kind of stuff, and I've worked in the financial industry during the recession. I worked at a bank and a real estate development company. And both of those organizations saw pretty catastrophic things happen. I think a lot of us that went through that, it kind of shaped the world. Has anybody in here read the white paper for Bitcoin? A few of you guys? Yeah. So that was basically some thought around, hey, could we create a system that doesn't work with third parties? Because third parties, financial institutions, are taking a lot of value out of the system and creating issues. The thing is that it wasn't new technology. Bitcoin is built on a lot of much older technology. It just was arranged differently. And so it's not something that was just invented. It's a lot of different technology that came together in a new way, which is what a lot of innovation is. It's things that already exist, just paired with other technology. It's one of my favorite things. Now I finally got to this place where I'm embracing Merkle tree and Merkle roots and hashing and stuff like that. But 1980 is when this came out, this concept of being able to do some stuff around public keys. And so it's not just something that came out of nothing. That's kind of what I'm trying to tell you guys. Like, this technology is based off things that were developed in the 60s and 70s and 80s. And with the advent of the internet, was able to form into something new. But it kind of sat as Bitcoin and a nerd experiment for a long time until this. Does anybody remember this? Yeah? Okay. Hi. A perfect use case. You needed to have some kind of way of transacting securely and semi-privately globally. And Bitcoin worked really well for that. And it was through use cases like Silk Road that popularized it, but also gave Bitcoin a massive rap that I think it still hasn't quite lived down yet. Even though this guy's in jail, this site has been shut down, it's still been branded as sort of like this dark thing on the internet. Paul Snow is one of the geniuses behind Factum. He came up with this concept that it was very cumbersome for doing other kinds of things, but we thought that there was a potential of being able to secure systems using the same kind of technology. And Paul wrote a white paper around that turned into Factum later. And so in this one, if you can make out, like, there's lions and fairies and stuff like this. And I come down from Portland, Oregon, where I had a marketing and branding agency, to try to understand, like, how do we take what I thought was a really cool technology and explain it to people in the dumbest terms possible? How do we make this relatable? So one of the things that I think Paul wanted to kill me at the time, but I'm like, okay, explain this to me using cartoons. Like, let's draw me a picture of how this works. And this is what came out of that conversation when he was explaining basically how Merkle trees work with fairies and lions diagrams. But the fact that he could do that on the fly let me know that he actually knew what he was talking about, and we could work together to help bring this technology to a place where I thought I could explain it to executives so that they'd want to buy it. We had to come up with ways of explaining this that it just wasn't in the vocabulary. We were still debating whether or not we should call it Bitcoin technology or blockchain technology, and we weren't sure if we were going to spell blockchain with one word or two. And kind of like all that sort of fun branding and marketing stuff that comes when you're trying to create an industry where there's nothing yet. And that was 2014, 2015. That's also when it stopped being just about cryptocurrency, because we'd started to see the emergence of other cryptos, but this was sort of the genesis of when we started to think about this technology beyond you and me sharing fake internet money. Now it's how do we use this technology to do other really cool things. And so 2014, 2015, we saw the emergence of other major platform players like Ethereum. I've broken it down sort of into like 3 high-level categories that sort of break it down so it's easy to understand, like specifically like what this stuff does. Any questions?
What projects are you looking at?
The things that I like to invest in are artificial intelligence and IoT. Basically networks that run IoT devices is sort of my sweet spot. It's how do we create identity so that machines can authenticate each other autonomously and securely in a way that when everything's connected on the internet, it becomes globally like the attack vectors are massive. How do you make sure, like, let's say a large state actor comes in and like takes over your fleet of self-driving vehicles, like that could be catastrophic, right? So how do you make sure that those vehicles are secure and can perform all those kind of things? So that's sort of the thing that I personally think is really interesting and fascinating in a place that I invest in research. Blockchains do a lot of stuff, but the main thing that we sort of want to think about is that it creates unchangeable data that a group agrees on. And so that becomes the history that is moving forward in time. So we all decide this is what it is, and then over time these events keep on evolving, but it's the concept, unchangeable data that everyone can see and share. Computers allow us to create changeable data that we can share, and that has become very, very powerful, but it's a double-edged sword because it can be changed at the most admin level. That means that you can't ever be sure of what you're looking at. And so that's the innovation within blockchain technology, is you still get to have all the benefits of software, but you can start depending on the data in new ways. So that's why things like mortgages and identities, like people's identities, have stayed in a more, I want to call it like analog, like a more physical way. Like you still have the physical paper, the physical IDs that have sort of these stamps on them from authority figures saying, no, this is an authentic piece of document, because we need to have the ability to trust that this is the person that we think we're transacting with, they have the funds that we think that they have, and they have the history that we think that they have. And the more that we can trust one another, back to economic sociology, the more vibrant our society can be. And the less that we can trust each other, one of the major issues within developing countries, the more difficult it is to transact. What blockchain technology lets us do is have a more vibrant global commerce. And so that's why things like not just cryptocurrency, but global identity would be really viable, because it's not just, think of it like I have an American passport. And I don't know if you guys have ever seen this, but they rank basically like the values of different passports. And a lot of that has to do with basically like how much people trust the authority figure, the third party that's issued it. But if everybody is being issued it by the same thing, then you can just start to trust people based off of their histories, which would be attached to their identity. So we're going to see within blockchain technology a major push towards identity as sort of like a global standard. And we're seeing a lot of that coming out of Singapore and India and Dubai and things like that, these countries that see that they can benefit a lot from it and maybe get a head start on some other countries like the United States or Europe that have already established other ways of having trust with identity. Let's get into kind of like the three parts of what this technology looks like. The first part is in blockchain there are blocks. What's a block? It's really just a record within a snapshot of time of all the transactions that are occurring on that blockchain. Now, if that blockchain is being used to basically transact Bitcoin, then that's you and me trading Bitcoin between each other and the record of that trade. And that's what is in a block there, all those transactions that are occurring. There's a lot of different types of blockchains that are doing different sorts of things. It doesn't just have to be those kind of transactions. They could be other sorts of things, but this is a simple way to think about it. A block has all the transactions that happened in a snapshot of time, and then that gets frozen. And we sort of all agree that that's what happened at that given point in time.
Are there standards in time periods?
Every blockchain works slightly different. There's ones that have like 15-second blocks, and there's ones that have 10-minute blocks. It really kind of depends on the blockchain. So I wouldn't say that there's a specific standard. This is just a picture I took, a screenshot of transactions on Bitcoin. So this is sort of, these are the things that go inside the block. So you see addresses, and you can see amounts of Bitcoin. And so that's just a way of kind of like wrapping your head around this and breaking it into pieces. What's a block? Oh, it's a list of all those transactions that happened at that given point in time. Any kind of questions on this? Yes?
Do you believe that that allows for more personal freedom or less, depending on who the issuer of the chain is?
Yeah, I think it could go one of two ways. It could become quite dystopian, like an all-inclusive system with some kind of like overlords or whatever. Like that's a definite possibility. It's very dystopian, but I don't think anybody would stand for that. I think that we'll find something in between. We need, we can't just all live in computers and have like a utopian world. Like we're still humans. We're still a little bit nefarious by nature. So I think that you have to have in some kind of something. There needs to, we still have a human element that we need. And I think that we'll probably see an emergence of both, because we already see that in our world. We see countries that have very open societies that are very free, and we see other ones where that are very not free. I had some friends that just got back from Cuba, and they told me about how they didn't see any commercials, but they saw a lot of propaganda, and how they couldn't get access to the internet. It was very limited and very expensive, and they couldn't get pictures and stuff like that. So I think, you know, it's going to be a broad spectrum, because it's not just one blockchain. This is software. There's going to be many different versions, and I assume every country would want to have their own, because like we've all pushed back against this whole like one world government. So I think every government will probably eventually issue their own type of blockchain. And I'm assuming it'll probably be some kind of like multi-sig thing. So it's not just you and I can make a transaction. There'd probably be some kind of limits put in place. So if I wanted to send you more than like say $10,000, I'd have to get some kind of signature off on that. Just like if I went to the bank to write a check for $10,000, the bank reports that now. So I assume there'll be similar kind of limitations put in place.
So you were talking before about like a lot of identity on blockchain coming out of countries like Dubai and India. And because the United States has an existing system in place, it sounds like they're not investing in a different way to approach that identity. So I was curious to know if you can characterize a country who does invest in blockchain technology versus a country that doesn't.
I wouldn't characterize the United States as somebody that doesn't invest in blockchain technology. One of our very first clients was the Department of Homeland Security around device identity. And so when I'm thinking about these kind of problems, like there's very lean governments, like Estonia, for example. They have a very small population. Most of the population is also very technical. They have a very young prime minister, and so they move very quickly because they understand the technology. There's a lot of there aren't a lot of blockers. And they have a strong imperative. Like I remember he used to joke about how they wanted to have a whole digital government so that when Russia invades, they can still operate and function for their citizens. I know, I giggled too. But so, you know, the US also wants to make sure that they're at the forefront of technology, but it's a higher stakes game. They have to choose things that are not political, that can prove the technology without creating roadblocks. And that they also have allocated budget for. So like our project with the Department of Homeland Security, like we're still building identity. For us as a software company, we didn't care if those devices represented people or cameras, because the software looks very similar, but it's a lot less political to say that we're building identity for a camera versus for people. Then people start thinking, oh my God, this dystopian future is coming at us very quickly. Okay, yes?
Is the statement that with the blockchain, at least we'll have more control over our own personal data, is that a true statement?
I think that could be a true statement. Do I think that that is going to be a likely reality? I don't really think so. I think that there's going to be people that would want to, but you have to think we're going to have to change our whole culture. We spent a lot of time moving people towards the cloud. So we used to have servers that we had all our own information in, and then there was a big push to move everything into the cloud, so having those servers run by somebody else. And in the same sense, do we want to be holding our own information, or do we want somebody else to manage that for us? And I think it goes back to how usable is the technology, how important is the information. So let's take financial stuff. Right now, when you are holding your own crypto, you're basically your own bank, right? And so like the bigger your bank, the bigger the target you have on you. And it's not just like people locally that you have to worry about attacking you, it's people globally. And so do you have the resources and the technical understanding in order to protect yourself from global threats from your finances? I don't have a good answer for that yet.
Well, Jared got his phone hacked, right?
A lot of people have. I know when I was with Factum, we were hit several times with hackers attacking our system, attacking executives individually, SIM card hacks. It can be quite scary. Yes, sir.
When you frame blockchain and applications being built on it, do you see cryptocurrency as an application on blockchain, and that you don't need it for every other application you might want to build on blockchain, or does cryptocurrency and any kind of new app go hand in hand in all cases?
So why is there a cryptocurrency? That gets back to if you read the Bitcoin white paper, it's talking about the disinterested third parties. And so if you have a large network, how do you convince that network to operate in favor of the system without some kind of incentive, right? We live in a capitalist society. You know, machines cost money and electricity isn't cheap. Like, there has to be an incentive. And so that's where the concept of crypto comes from, as a way of incentivizing a disinterested third party. If you want to share data, sort of like a cluster database or something like that, I don't know that you would need a crypto. Like if everybody that is deciding to do what would be probably like a private blockchain versus a public blockchain. So public blockchain, I'll just back up and talk about that real quick. So a public blockchain would be one that anybody can participate at any level. They can make transactions. You and I can trade Bitcoin. They can mine it. They can contribute to the core code at any level. There's no restrictions on interaction on that blockchain. And there's a lot of blockchains that aren't all the way public. There's a lot of, from totally private networks to semi, where the public can interact with it at some level, but not at all levels, right? So it kind of depends on like the purpose of it. So if you have a network and a purpose where you can trust everybody working together and they just need to share information, then it might be an appropriate use case. But if you have people in a network that you don't trust specifically, or the value is high enough, or you're worried of outside people attacking or something of that nature, then anchoring or utilizing a public blockchain would probably be more appropriate. Okay, so chains. What is the chain and blockchain? Has anybody eaten this? I've eaten this before. It's kind of gross. It's not this, but this is a good analogy. Chief Scientist Brian Deary at Facta made this analogy for me, and it made a lot of sense. So it's like corned beef is made out of a lot of cows, but you can't get a lot of cows out of corned beef. Like once it goes in the can, it doesn't come back out. So the concept is around hashing. This is how you basically can create a digital fingerprint of data it used to be a cow. So it's a way of creating digital fingerprints of data, and those so like those blocks, you get a hash of that, and then you put it in the next block, and that's how you sort of chain them together. You know that this block happened then, you hash it so you have a fingerprint that it existed in the format that it did. You put that in the next block, and you chain them together. So that's the chain part of blockchain. I might have got too caught up on the joke because I think it's hilarious. Did that make sense to anybody in this room? One person, yes. Okay. Any amount of data can be broken down to a fixed string. So it's a way of being able to take any kind of data set and prove it very quickly without having to go line by line. So it's not like a public key or private key. It's not encryption. It can't be. You can't derive the original data from it, but you can always prove it. So often I would use a sheet of paper and say, on this sheet of paper there's a bunch of text, and if I change one I, we'd get a totally different hash, a totally different random string of numbers. And this is a way for us to prove that none of the data has been tampered with at any time. And hashing has existed for a really long time. It was developed by the US government. There's a lot of different algorithms out there. So to kind of review, this is all the transactions that go inside of blocks. These blocks are linear in time, so it's a little chunk of time, all those transactions, and they get locked together with hashes. You take all this data, you hash it so you have a digital fingerprint, and that gets put onto that one. This one gets hashed, and so it includes the hash of this one. It gets put over here and chained together. So you end up with a blockchain. And so this data could be Bitcoin transactions. It could be data feeds from IoT devices. It could be whatever your heart really desires, depending on the use case.
I guess this is kind of more on the monetary side, but maybe it could be anything like just thinking in the future and inheritance and like your family and money and like years and years down the line of lineage.
It sounds like a really big question.
I
don't know.
Could your like blockchain just get like really huge? Is that the idea that like it's just like every transaction going back however long it is, or is there like I don't keep my bills from like 5 years.
That's a really great question. Is if the whole world basically shares a database, and that database keeps on growing over time, it just keeps on getting bigger and bigger and bigger. You can imagine like the exponential size of this, and that's why Bitcoin used to be super easy to download, and now it takes like forever. Is because that history just keeps on getting longer and longer. And there's a lot of debate around whether or not we can trim it down and remove data that's not as useful or important anymore, or other ways of doing that. So that's pretty hotly debated. One of the things we did at Factum to help solve for this, because it's not just like Bitcoin transactions are pretty light. It's just that transaction data, camera data, photo data, all that kind of stuff that could be quite large. So what we had designed were basically chains of chains. So every device would have its own chain of information. And so if you wouldn't have to download the full Factom blockchain in order to prove your data, you could just download the data that you were interested in and still have a very similar security.
Just define the scaling problem.
It was how Paul came up to solve the scaling problem, and what attracted me to the concept of Factom and to want to come out, because I thought that was brilliant. So the third part, which we kind of talked a little bit about when he asked the question about whether it was a public network or a private network. This is a picture I took of visualization of the Bitcoin network. Each of these little colored dots are nodes. Those are programs running the blockchain for Bitcoin. And so the general concept is the larger your network, the stronger it is, the more resilient it is, because you have more points. You'd have to take over more nodes on a network in order to take it down. So the concept is if you have 10,000 nodes running, that's a lot harder to take down than if you have 10. So there's a lot of new blockchains that have emerged. And one of the things a lot of people don't know about them is they're not this size. They can be just a few computers running them. Eventually, like Factom, for example, will probably be running, I think, on 63 or 64 federated nodes. Anybody else can run an additional node, but like that's a much smaller footprint than Bitcoin. Ethereum, which is another popular network, it's a blockchain that also has a Turing-complete programming language. Does anybody know what JavaScript is? Okay, so think of that, like it has probably like, I think it's 5 or 6 Turing-complete programming languages that let you basically build any kind of application you can dream of within a blockchain. So it's pretty cool. So if you guys don't know about it, check it out. They have languages very similar to like Python and JavaScript in them. This number changes every day as computers come on and come off. So this is the part where I was going to talk to you guys about some of like cool applications of blockchain technology. In the last 18 months, there's just been like this proliferation. And I don't even feel like somebody that spends their whole life in this industry, I can't get a grasp of everything that's happening. It's insane. It's like anything that you could think of that then you attach blockchain or crypto to is now in the space, whether it's in the biomedical field or IoT or artificial intelligence or digital representations of cats. It's now been blockchain. So what caused that was ICOs, initial coin offerings, the ability to raise capital really efficiently, globally, and every entrepreneur said, okay, let's do this, because I've seen people raise millions of dollars in seconds doing this versus as an executive at Factom, I had to go out and help raise capital. There was several of us working full-time just raising capital, and as an entrepreneur and as a startup, you can either be raising money or building a company. So if you can raise money fast and just focus on building a company, that's every entrepreneur's dream, because raising capital sucks. You know, has anybody raised capital? A couple of you guys, yeah. It's not fun. It can be sometimes, but usually it's when the checks are coming in versus the VC being like, that's the stupidest thing I've ever heard. Which happened because blockchain didn't exist when we started raising capital for it. And so that was fun. So, what I put up here, has anybody heard of Brave browser? Brave browser? Okay, it's a new browser that you guys can use. They've built in what is called a basic attention token. So instead, like when you get on Google Chrome and you're surfing the web, you are the product. Google is harvesting all your information and selling it to people that want to buy it. Versus here, instead of that third party, Google, being in control of your data, you're in control of your data, and you can basically sell it or give money to the websites that you like. So check it out. It's kind of an interesting flip, and it's a great little browser that's pretty secure. I'm using Brave browser now. So Smart Track. I put this one up because I knew we'd be talking about identity a little bit. Smart Track is a German company. They build many of the RFID, NFC chips that are used for things, everything from like Amazon uses them to track packages to if you have a passport, you probably have one of their chips inside of your passport. So one of the major problems, because they don't just do these, they also do feeder documents. These are birth certificates and other paper documents that are used to issue passports and driver's licenses and stuff like that. And they supply the stuff globally. And so feeder documents are basically the major point of identity fraud. So if you can create a paper document that then has provenance, you can look at it and say, who is this actually issued by? How old is this document? Does this document, because the feeder document could have a chip inside of it that then you can scan it with your smartphone and a picture would pop up and you could basically authenticate, hey, does this birth certificate actually belong to the person that's presenting it to us? So they've created that technology using blockchain, which I think is pretty cool. And they also own so much of the market that, you know, if they already have 80% of the market, this is kind of in their sort of skunk work stuff, but that has a lot of potential. And I know that they're rolling it out in some developing countries around their feeder documents. So passports and birth certificates could start being built using these feeder documents. So I thought that was pretty cool. We talked a little bit about Ethereum. Ethereum basically, they didn't invent the concept, like Factom actually did do, we called it a software license sale because we didn't have a word for it. It's like we were buying a license to use our system. This Ethereum you were able to basically write a smart contract that then allowed people to issue tokens that then could help fundraise for different projects. Very, very cool. That's why we see so many of them, because they made it a lot easier by having similar programming languages like JavaScript and Python that people already knew how to use. We talked a bit about the Department of Homeland Security around IoT devices. Netkey is another one that has been in the space for a long time. They're out of LA. They do some stuff around identity. Don and Justin were already people that helped found companies that were early in the internet. So these guys came up with the concept that, has anybody sent a Bitcoin to somebody else? Before the ability to basically scan the QR code with your phone, you had to like type out the address. And it was always very nerve-wracking because if like one letter was wrong or missing, you could send it into space and you just lost your cryptocurrency. So they had the concept that addresses should be human readable. So they started working on that and now have moved into identity and have won some really interesting projects. So that was kind of like, I wanted to give you guys a flavor of everything from hardware to something tangible, like I'm sure a lot of you guys have passports and driver's licenses, to internet browsers, to, you know, something else. When you guys are thinking about applications of blockchain and Bitcoin, like, what do you guys think about? Like, yes?
It seems to me that a lot of the new frontier of apps is going to be based around our own voices. And I'm interested in your perspective, especially around identity, understanding how voice from a personal brand versus a professional brand will be implicated into the world of blockchain and how it will be useful.
Good question. So when I'm thinking about like what builds an identity, it's not just like a single instance. It's not just your driver's license. There's a history around your driver's license. It's not just your driver's license, you also have a credit card and maybe a library card. People still go to libraries. Or your loyalty card, or your voice. So these are all like attributes that contribute to you over time, right? So I think these sort of like biometrics, I don't remember where I heard this or read this, but it's like that should be your username, not your password, right? So it's a concept of like being able to fake your voice or get your voice to say something that you didn't say. We've already seen that that's very possible. Anybody see that funny video on Facebook where Obama was talking and it wasn't Obama? Like, that just made it really clear. Like, this technology exists, you can fake video, you can fake voice, and how do you make sure that that's authentically that person? I think that we have to think of that kind of data as attributes, and also the ability to cryptographically sign that. Like, this is officially your voice, and being able to sign that cryptographically might be something that we see in the future. I don't know what the presentation of that would look like, or why we need that, maybe for something official.
I'm thinking more for commerce. You know, you're going to buy something on the internet, you're going to be at a concert, you're going to walk up to the kiosk when there was an available square for crypto, which is not available yet. But when that happens, you'll be able to just talk into something and say, I'm purchasing this is me.
Yeah, I'm assuming like that it would just be part of a broader identity. You wouldn't just be authenticated by your voice. Like, you might also be authenticated, oh, it's the voice, and you also have a smart device that's linked to you, and maybe you're implanted with a chip. I don't know. But like, as one of many attributes, and the more points of reference you have towards an identity, like, the stronger your trust is in it. It's like, if you just met somebody and they tell you, hey, my name's Bob, you're like, you may or may not be Bob. But if you know Bob for like 20 years and he has maintained that identity of Bob, you have a lot stronger belief in Bob. How do we change money in between each other? How do we extract value out of this economy? Why do we buy into this economy and this structure? And when it stops working for everybody, which, like, when we're moving towards automation, like IoT devices that can perform basic tasks, and artificial intelligence that can perform what used to be done by white-collar jobs, what kind of economy do we live in? How, like, 7 billion people don't disappear, they still need resources. And how do we allocate those resources? I think we'll start to see that that being rewritten. So this isn't specifically blockchain, but like, we're seeing countries experimenting with, basic standard of living allowances, and some of these other things where people kind of get like a basic income, and then they can work beyond that. So I don't know what's going to work, but we're going to start to see a lot of those experiments. And blockchain is an interesting place to keep the records of that. How do we make sure that we trust this system when we've lost so much trust in our current government systems? ICOs, initial token offerings, coin offerings. It's the ability to basically raise capital to build your idea. There's a lot of different ones, from, is it a cryptocurrency that is then incentivizing a disinterested network? Is it basically a security? Is it giving you ownership rights in some kind of organization, or voting rights in some kind of organization? Or is it a utility where, like, Factom's a utility token? So it's like, in order to write data to a block, you have to utilize some factoids. These are the currency of the network, in order to write that, and then it's destroyed. It no longer exists. So it's a pretty broad spectrum. It's also really cool because it allows companies to come up with a concept, raise capital to build it, and then have this amazing self-clearing and auditing system that keeps track of all of this stuff. So right now, when a company wants to raise money, they go to VCs and angels, raise that capital. Maybe they have a public offering, an IPO at some point. We've seen progressively over time that we're seeing fewer IPOs, initial public offerings. and that those offerings are being at higher and higher rates. So like when Amazon did theirs, I think it was in 95, 96, their market cap was about $500,000. I mean, sorry, not $500,000, 500 million. So if you would put some money into that, maybe about $5,000, you would have life-changing money. I'm trying to like remember the stats off the top of my head, but you would make a lot of money because the company was so much smaller and you're buying more into the risk versus when Google did theirs, that same $5,000 I think would make you about $100,000. And if you did Facebook, it'd make you maybe about $20,000. So these are very broad numbers, don't quote me on them, but you have to think like the company is not coming to market worth $1 billion. It's coming to market at a smaller price. And we've seen that the price of those companies, when they're doing their IPO, is getting higher and higher. So you guys as a public trying to buy stock in this new technology, you're seeing less of the risk, but you're also seeing less of the reward. So putting your money into it, you're not going to see the same kind of returns that you would have in the 80s and 90s or earlier. So with the demand for interesting investment opportunities, when investment it hasn't been looking good, I think there's been a lot of pent-up demand for interesting new investment vehicles. And that's sort of where ICOs come, because these are brand new companies that might not have even any technology. There might just be a white paper, a concept. So it's very, very high risk, but you also have potential of really high reward, like 1,000x on that investment. Just to put it into terms, like people that bought factoids, they bought them at $0.25, and they could have sold them at $80 within 3 years. And that wasn't the best performing or the biggest ICO. That was a very tiny one that was early. There's been many that you put in $5,000, $10,000, and all of a sudden you never have to work again. So that it became very, very popular over the last 18 months. And the estimates for ICOs for 2018 have already surpassed the ones from last year. We're just seeing, even with the SEC squeezing down and other governments trying to shut them down, they're still growing. I was trying to figure out how much capital was actually put into ICOs so far this year.
9.87 as of this morning.
Okay, that was what I found too, and I couldn't figure out if it was the 6 billion or the 9 billion. But I think it was probably your number, the 9 billion, which already surpassed what we did last year. So it's a new emerging investment vehicle. It's very, very speculative. It's very, very risky. But it also seems to be the trend right now. So because, like what I said earlier, these things, is it a currency? Is it a security? Is it some kind of piece of software? Is it some kind of like utility? Like what is it? It's been very difficult to describe what this is. And so when the SEC first looked at this last year, like officially they put out a document, I think it was in August, that basically said, these are securities. They're basically like stock that give you, when I was talking to the lawyers, they're like, okay, well, if it's stock, does that give you voting rights? Does that give you ownership? What kind of liability do you have as an owner of this? Like their heads like, but it didn't really account for what if it's not? It's clearly not a security. It's clearly a currency. So then the SEC is kind of like differentiated between people. They basically said utility tokens don't exist. They're basically all securities. And then there's also cryptocurrency, which is a currency, and then everything else is securities. And now we're starting to see very, very recently, I think it was yesterday or today, that they're starting to see the nuances of this technology. That yes, it totally could be a security. Totally could be a currency. It could be a utility. It could be a lot of different things. So they're starting to understand this technology a lot more. And I feel actually pretty optimistic about how the SEC has been approaching it, because I did think that There was a lot of blatant fraud in this space. People were losing a lot of money. I also thought those people were dumb, but that doesn't mean that they weren't having, so there wasn't fraud there. So the SEC initially started going after really massive raises where you're like, that company that's basically a white paper just raised $100 million for a system that has already been built 3 times, Filecoin. Do they really need $100 million to do that? So they started going after really massive raises that just didn't make any sense. Big targets so that they could be like, we just took down this company that raised $100 million fraudulently. Like, that makes press for them. And then the clear, blatant fraud stuff, like there's some guy doing some weird real estate diamond security thing that got taken down. So we're starting to see arrests happening from people that were doing blatant fraud or bigger raises. I put up some of the big players that are trying to come up with ways of solving some of the problems around doing an ICO, like having the identity of the person that put in the money, so you don't have some of the anti-money laundering things ignored. So I put up T0. T0, has anybody used Overstock, bought stuff on Overstock? It's kind of similar to Amazon, came out at a similar time. So they have an investment fund called Medici, and they've been actively investing in blockchain and cryptocurrency companies forever. They're one of the first major retailers, online retailers, to accept cryptocurrency. And so they were so mad when they did their public offering how much they got screwed that they basically swore vengeance on the existing system and wanted to come up with their own. So that's basically what T0 is the ability to trade securities in a self-clearing and settling system. CoinCart, I thought I'd a little shout out to a local company. They're helping facilitate ICOs and helping do some of that stuff too. Great team behind them. Polymath, Canadian group. They're also kind of working on how do we create, how do we do the awesome stuff that ICOs can do while also doing it legally. So I thought there's a lot of other ones out there, but I only had this slide, so, and I happen to know a bit about each of those projects, so that's also helpful. Yes?
Yeah, so on utility tokens, you mentioned with Factoid that the utility token enabled someone to build on the blockchain. Is that right?
Almost. So probably you're thinking Ethereum, and you're also using Ether, which is Ethereum's native currency, in order to facilitate that. So every time you're entering data or doing a transaction, you're having to utilize the token. It gives it some utility. But you and I can also trade Ether as a currency. So it can both be a utility and a currency. Factom is a very bare bones light system. It basically is, think of it as a publishing engine. It's just trying to publish data on chains as fast and cheap as possible. I kind of wanted to end on this thing. This is Vitalik. He is the genius behind Ethereum, a very nerdy Russian guy. Basically, human computer, he's lovely. He even put it out himself. He's like, most of these will fail. So as you guys are looking at this space, realize it's emerging. This is all new technology, and just like the internet, how many companies from 1995 up to 2000 existed? What came out of that? We still got our Amazon, we still got Google, but it was a proliferation of many, many different concepts as people finally grasped what could be done with the internet. And at the same time, that same exuberance of let's ship dog food didn't really work in the 90s, but kind of works now. So I think we'll see that. We'll see ideas that aren't working now because the tech's not ready, that we'll see again in 10 or 15 years as we see the technology catch up with people's imagination of how to use it. So that's the thing to keep in mind, is like the tech is still really, really fresh it's still quite difficult to use. And a lot of things are going to fail. But just like the internet, I think that this is going to be one of the fundamental things that will shape our global economy and how we relate to each other, both through how we spend money and our identity, because it helps create that one thing, that permanent data that we can all start to trust. Whether or not that data is correct, I don't know. But once you put it in, you can't take it out. So, good?